Hello, everyone. Welcome back to another episode of Mortgage Tech Talks. Today, I talk with Chris Grimes from FundMore.AI. We chat about his journey. He actually, funnily enough, started as a broker, but found himself in the lending tech space. So how that transition happened and what's really holding back, yes, the mortgage industry in general, but more specifically, lenders and what they're dealing with legacy 20-year-old systems, how we actually penetrate that, disrupt that. And really quickly, we get into very fascinating conversations about blockchain, about AI. We go down a little bit of rabbit hole, but it's a lot of fun. I had a lot of fun with this conversation. And if you're interested in these types of emerging techs, the implications of them, and really their impact of mortgages, but the, I guess, general population at large, I think you're going to enjoy this conversation. See you on the other side. Truth maybe is that every time you put a document in an email, that is the most vulnerable place. Hey, Chris, welcome to Mortgage Tech Talks.
Thanks for having me, Tom. Looking forward to chatting with you today.
Yeah, likewise. I think this will be a good one. Maybe just right off the top, something I didn't know about you, and only kind of when I was doing the research leading up to this podcast did I find out, because I've always known you through the FundMore lens, which is obviously more on the lender side of things. But you've actually had a bit of a long history, I think, on the broker side of things. And that's more kind of in the sandbox where I play and I think where a lot of our listeners play. So I mean, I guess talk to me just a little bit about that, I guess, just in terms of, okay, you were a broker, you were in that channel. How did you kind of end up on lender software? Was that a very natural transition, something you just stumbled into? Yeah, just curious how you kind of, because usually brokers in the broker space, they build broker tech, right? But you kind of went a different way there.
Yeah, I'm not sure I intended that. I think we were running down the broker channel. We really had this idea that you could create a digital mortgage around 2017, 2018,
Okay.
and really remove processes. And we actually aggregated a bunch of software. We had no interest in building software. There was so much going on. Obviously, using one of the POS providers, so you have to have it for a submission. And then we pulled software out of the US, UK, Australia, kind of cobbled this whole thing together to be able to try to digitize the workflow from the moment a lead gets generated online, at least until the point you submit it. Ended up having a small little call center behind it and really tried to digitize as much of that as possible. And it was actually one of the reasons why we ended up on the lender side was simply because we would submit what we thought were whole, fully baked packages, fully underwritten, document validation. And then it would pause and it would take weeks to actually get like full response. You might get a commitment back in 24, 48 hours. But if you wanted to execute this sort of digital mortgage, to hold that customer for more than 48 hours, 72 hours, or a week, you had to work really hard. And then you get into 2, 3, 4 weeks, and they've already talked to 17 other brokers or 17 other banks, and you're fighting now to retain that customer back. And it was through that frustration that we went out and started talking to lenders and trying to understand why they wouldn't accept the data and the quality of the data we were sending them. And I mean, I wasn't naive. I mean, like you said, I've been in this for a long time. I understand there's due diligence. Everything else had to be, done on the back end. But seeing how outdated the technology stacks were on the back end of these lenders, it was really what drove us to get into building software for banks. And if we looked at the plumbing of lending, that was sort of the target. If we could fix the plumbing, then all the innovation that was being poured in the front end, we could actually be supported. And all the cool engagement tools, stuff like you're doing with your, CRM platforms and the innovation that was happening in the POS systems. It's so segregated right now because information can't flow into the back office systems. And I'm going to point a little bit to the US and then I'll stop talking for a second. But you look at Encompass.
Yeah, I know those guys.
If there's a model for where I'd like to be in 25 years, I'd like to be them. And simply say that, look, I built a product 25 years later. It's still the most widely used product. Right? 25 years. This is a system that is dominating the US. You think about how fast technology evolves today. Majority of banks in the US are using software that's 25 years old. It's the exact same problem here. When we got into it and we started understanding it was one of the back offices, they're all using stuff that was built in early 2000s, late 90s.
Right.
Some of it home built, some of it off the shelf. It created all kinds of frustration and problems when you think about how you would truly provide a digital mortgage.
Yeah, I know those guys Encompass, and they just have such a footprint there and they do some great work, at least what I understand of them. But It's funny. It's one of those things. I'm going to show my nerd side a bit. I was an engineer. I went to school for that. And in chemistry, they always talk about the rate limiting step. It's this concept, right, where if you have a reaction, call it combustion, you burn some gas. It takes your gas and oxygen and it turns into CO2 and water. But there's about 5 different steps along the way. And the rate of the whole reaction actually determines on the one step that takes the longest, right? Of those 5 steps, number 2 might take the longest. And that's by far the main thing that determines the speed of the whole process. And so it's kind of the same thing here, right? Where it's like you can do all this fancy, very probably impressive work on the front end, get the docs, get this, get that, and so you take that process that could take a week and turn it into a day. You save 6 days, great, but then it's still on top of this 2-week leg, right? It's still this thing from a client perspective. And I think we're going to maybe talk about this a bit later, where it's you can do all this cool tech, but at the end of the day, your goal is to solve client problems. And that problem's still not solved, right? Okay, yes, I sped up this part, but the whole process, me getting a mortgage, is still not solved. So, no, it makes a lot of sense and totally get it. And we've done something similar. We say, okay, how can we look at this? And then we look at the lender space and go, oh my God, this thing is 20-year-old software and big companies and this and that. And so I think, we were maybe a bit more shy about it and said, okay, well, stick to our lane and do this really well. And of course, we've been happy with it, but it's a big mountain to climb. So I guess, am I correct in my assessment that it's a big mountain to climb? Did you know that? Were you having the same thought process, that little one that I just had now, when you were looking at, the lender tech space of like, wow, this is a big mountain, but I'm going to climb it and I'm going to get to the top there? Like, what was your kind of thinking as you were getting into that?
I wish I had that conversation with myself, or I had that thought, because I may not be having this conversation with you today. Certainly did not know what I was getting into. It was one of those, you don't know what you don't know. And for that reason alone, I'm here today. And for that reason alone, if I'd known, I probably wouldn't be.
Sure. Yeah. That's always the case though, right? That's always the case. Yeah.
There's a reason why there's not a lot of innovation in back office solutions for banks. And I mean, there's the probably less obvious reasons, if you think about the perception of lack of our return on investment for these banks, it's a huge capital outlay to be able to replace core systems, the inevitability of massive integrations within different systems within the banks. And most of them are also legacy. You think about some of the core banking mainframes, things like this that have to be somehow integrated with, and there's no APIs because these things were built so long ago. So super costly to do it. Is a huge time drag on key individuals within organizations that have to commit their time to be able to execute something like this. So you see all this as a blocker. Once from a lender side about thinking about making these types of implementations, I had no sight to any of this. So that was the first thing that would have been discouraging. And I understand why there isn't a lot of it. The other part was when I go back to when we started building this thing in, 2020, it was very much supposed to be a very small platform. Okay. And really simple, one page, scroll a little bit, make your decisions very fast. The reason why it was FundMore.AI, and I hear others in the industry talk about AI and, is this a bit of fluff or is it real? But, the first version of FundMore was not a platform. It wasn't anything. It was actually just an algorithm. And it was this concept that, okay, well, if you could take all the data and then process it through an algorithm to come to a faster decision, would that support the output? That was sort of how we started.
Like almost not even like a front end app, like just a pure back end. Maybe it's an API. I ping it with some information and you give me a response.
That was our thought. Yeah. 2 things came out of that. Number 1, we couldn't even find a way to ingest that into their back end systems. Number 1. And number 2, it didn't seem like anyone was ready for it. And so this concept of what FundMore.AI may have been never really materialized. And it was through that we started pivoting into what became a full platform for lending. And I come back to that comment about it being small and, thinking that you could execute what it is. But when you get into, again, blessing and curse, I'm sitting here because we have some incredible customers and clients that took, some bets on us early days and managed to shape us into where we are today. But it was also one of those things, we've kind of hit the full spectrum now, from private lending all the way up pure prime lending. And it's enormous, like the requirements across all those different verticals. And so even though we thought we were going to participate in one small vertical, we've managed to penetrate the entire space in some capacity.
Yeah.
And it's, 400 or 500 features and consistently growing. It's a beast. So no, if I had known everything, I wouldn't be here.
Okay, well, and you are now, and I've heard of you guys and heard the great work you do. So I'd imagine you don't regret being here. It's kind of one of those weird, I guess, double-edged things where, okay, I'd have known maybe I wouldn't have done it, but also I was in the trenches. We kind of did the hard work and grateful to be maybe on the other side now. I think it's also funny, like for myself, like I said, I'm an engineer, I have some of that. And that's always like the developer dream, I think, right? Where it's just like some back-end service. I don't know if you guys know like Twilio, right? Where it's just like, they don't even have a front end. Not really. They kind of done that. But like when they started, it was kind of like that. It's just like, I ping this endpoint, it sends a text, right? And it's just so simple and it's so great and amazing docs and all this. And I kind of have the same dreams, but then, yeah, when you get into it, you're only as good as the people who are using it, right? Or only as capable as, the capabilities of the people on the other side. And I guess there's a lot of, work to do to get, these lenders here. And instead of waiting for that, you just said, okay, well, I'm going to do the work for them. And right. And here you are. I want to get into a little bit. So you talked about, okay, there's all these legacy systems and there's this big hill to climb and, change management and the capital and the time of these stakeholders. You talked a lot about the internal side of things. I also want to talk maybe a little bit about external things, but let's start on the internal side. So it was this massive hill to climb, but obviously you guys have climbed it. Was there like a silver bullet for you guys when you said, hey, for everybody else who tried to do innovation in the lender tech space, they missed this one thing that was just so amazing for us? Was it just that you guys were extremely good at, painting that picture of an ROI for the necessary stakeholders? Like, what allowed you guys to do things that, people for 20 years said, hey, I don't really think that's possible, or hey, I don't have the corporate willpower to go through with something like this? Like, did you have something like that? Like, what was kind of your secret sauce, if you had it, to kind of break through this?
I'm going to echo what others have said to me because I've asked this question of others, and our industry experience within our team certainly helped because we were able to speak the right language and we understood where the real challenges and problems were. Got an incredible tech team that built some very scalable product that allowed these lenders to at least give us the chance to show that we could actually execute on this. There was a vision from day one, and it was the vision that allowed us to win the early customers. Mm-hmm. And it was really around this idea that, I've talked about it before, but in my opinion, you should be able to walk into a home on a Sunday afternoon in an open house, and by the time you sit back in your car, own the property if you want to. Yeah. It should be that simple. There's a lot of moving parts, and obviously mortgage lending is not that easy. And there are others in the industry who would argue with me about whether or not you even need to have that much flexibility. But, having that vision and then speaking to others in the industry and trying to bring in as many partners and collaborators as possible, because it's the collaboration that will execute that vision. There's no single company that will be able to execute. I don't care how big they are or how small they are. It's just, there's too many moving parts in a mortgage. Yep. But if you can get everyone sort of rowing in the same direction, there's a chance. And so, I think it's those three things that allowed us to at least get our first few customers and getting a few of them live and, seeing that it works, and some of the early feedback from the customers that are using it, and, the actual end users, the underwriters, and hopefully that spills back to the front end, the brokers, and eventually the Canadians buying homes. There's some improvement in that flow. It's allowed us to continue the journey.
Yeah, the whole vision that you have of, okay, I go to open house on a Sunday afternoon and by Sunday evening I own the place. People might argue, okay, but do you really need to do that? They can wait a week, who cares? But, I think the big thing I think it provides is not so much the time saving. It's like, okay, sure, maybe it's not as much overhead, but it's just the uncertainty, right? I mean, I think anyone who's gone through that home buying process, like I always say, the thing that stresses me out the most is when I don't know how to solve a problem. If I know how to solve the problem and it's, a really big, journey to get there, but if I can see that path, it's like, okay, I can at least handle this. But it's like when that path is foggy, that's what makes it tough. And I think that's the real value that, you guys would provide to that homeowner. And then also, yeah, the vision, it's a powerful thing, right? Like I'm a big Elon fan, and I know some people have mixed feelings about him, but like you look at some of the stuff that he does and the companies he works for, like he works his team like super hard, right? And he's like pretty ruthless. And I think like you read his book from Walter Isaacson and he's yelling at employees and all this stuff, but still like the best and brightest people go and work for him. And I think he pays well, sure. But I think it's also that like has this vision of, hey, I'm going to like put a man on Mars, a civilization on Mars. And if you can have that vision, it's insanely powerful. I want to switch gears. I said I would, and here it comes, I guess, on the external side of things. Where I want to start is I always say that the mother of innovation is necessity. right? The reason most times innovations happen is because they kind of need to happen. And that can happen at a society level or it could happen at an individual level of, I remember Bob Dylan, one of his greatest songs ever was written because he needed to get a song out to get his paycheck or something, right? Like, it's one of these things, right? And one of the biggest necessities I think that can exist in a marketplace, let's say, is competition. So, you look around and you say, okay, well, these companies haven't changed in 20 years. But, if a competitor came along and started writing files in 10 minutes, a young, innovative company that would do that, I think these lenders would, turn 20 years into 2 weeks and try to, start competing with this new company that's eating their lunch. So, do you have the same sense, I guess? Do you feel like there's a reason that, the snappy young hypothetical competitor that I'm describing hasn't come along? Like, what do you think of that? Because whenever I hear that, it's a stagnant industry, this and that, I think, well, why doesn't a competitor just come in and eat everyone's lunch? Like, what's kind of your sense?
This will be a complete opinion, but it's liquidity and capital. So let's say you and I decide we're going to start our own little lender and use some of the technology you have, some of the technology I have, and we put this thing out there. And we even managed to go find some money to even put out on the street. Let's just assume we could do that at a scale. They will have so much control over those dollars and how it's actually put out. Then you layer on the regulatory complexity around it. Everything comes to a grinding halt. So you need to be able to find a way to work around the regulatory process, which isn't easy. And you need to have liquidity that allows you to put it out much faster than your competitors. If you look at the lending space, there is an opportunity, I think, in the private lending space in some capacity because there's a little bit less overhead. It's still regulated, but there's less of it.
Yep.
It allows you to make, I think, faster decisions. But again, without having the capital behind you, it's difficult to do it. And so unless you can consistently find new capital, or we find a way of creating a true secondary market in Canada where maybe, you can open up other wallets to access money to be able to put out. I think that, in my opinion, is one of the biggest reasons. I think if you're a large lender today, you're incentivized to try to move it as fast as you can because the look to book ratios and all that other stuff, it all costs you money the longer it sits there. We know that.
Of course. Yeah.
You need to move it quicker than you do. You need to make faster decisions up front. Is this a file you can even adjudicate? Is it even something you want to spend time on? And then getting it out the door so that you can fund it. I think technology can play a factor in that, but I do think it's more of a capital issue than anything else.
Capital, interesting. You said one thing, and this is maybe showing my naivete, if that's the right word, more on the broker side than the lender side, but you talk about opening up more wallets. What do you mean by that?
Traditionally, you have institutional money behind lending, mortgage lending. Let's just think about blockchain and leveraging blockchain as an example. So you create a token or even you leverage Bitcoin or Ethereum or something like that, to lend against. But even then, you need a way to move it. And you need to move these assets on a fractional or at least individual basis.
Yes.
And we were probably headed in a direction where there would have been some sort of unified blockchain rail, whether that ended up being Ethereum or something you see in the US or something that maybe the Bank of Canada initiated and actually built. But then, we have the FTX fiascos and things like that put a massive pause in this type of innovation. But if you actually think about trying to solve a lot of the challenges in lending, blockchain solves a lot of it. You have immutable contracts. Everyone can reference the data. I won't name the latest Canadian bank to get fined, but there was another posting this week, and it's all stuff that doesn't happen if the mortgage is registered on blockchain because that information is 100% accessible by anyone.
Immutable, distributed. Yeah.
And anyone that needs to have access, I should say, right? It's not open public view for everyone, but if you're moving that transaction or that mortgage or that book of mortgages, you can easily access it. There's a natural fear behind it because of, like I said, I think some of these crypto plays that went horribly wrong.
You have to separate it, and I think you know this, but this is just my opinion, and I'm a big Bitcoin guy, I guess you could say, so it gets me kind of riled up when I hear this, where you got to separate the technology, the underlying technology, from the bad players, right? It's like, FTX wasn't a good thing. No one's saying that's a good thing, but you don't throw the baby out with the bathwater, right? Like the underlying platform, the blockchain that exists, the proof of work, the proof of stake, all these things that are really interesting and good. It can solve a lot of these types of problems. You don't want to group them all together.
A simple use case for blockchain. How many times in the process is ID verified today? In fact,
Too
The
many.
regulators went out of
Yeah.
their way to say it's not done enough, so we're going to double down on it and make sure everyone's doing it properly.
Yeah.
It really needs to be done once, and then the chain of custody of that information needs to be accessible by everyone involved. Blockchain's a great use of that.
Needs to be accessible and verifiable, right?
And if you had that individual's ID on blockchain to begin with, where it's a lot safer, you as a consumer or individual can decide how and when it's accessed and used.
Right.
Way more secure than what we do today. And then that information is shared with your mortgage broker who's done their work, or realtor, whoever's at the front of the line, and it just passes down the line. And eventually it hits the lawyer and it funds. You can do that for income verification. You can do that for property search, title, all these things that happen at every stage multiple times over and over, adding massive amount of time to the entire process. All of that could effectively go away.
Yeah. So what is it, if we wanted to say, I'm throwing a bunch of hypotheticals at you, but, we want to implement that and have some innovative service in Canada today. You think it's more, and I have a bit of an opinion on this, but I'm curious yours, is it a consumer confidence problem / education, or is it a regulatory thing? I think it depends which technology you're talking about. I think today for blockchain and crypto, I think people are very scared of it. I think it's a consumer confidence thing. I think AI, we're more on the spectrum of we're going into dangerous waters on the regulation side, and I'm sure we could open up that whole rabbit hole of AI. But yeah, that's my take on it right now, where it's, even if regulators said, go have fun, go do your blockchain ID verification, I think people are a bit scared of it. And I guess that's another, interesting wrinkle with all these types of innovations that we're talking about, is it's not enough for the software company to do it. It's not enough just for the regulator to say, okay. Consumers got to trust it too, right? And I mean, that's not just blockchain, that's across the board.
It's the same with open banking, right? It's this,
right.
This general fear around this information being quote unquote online. Well, the information is already online.
Yeah, Chris is going to see what I bought last week, right? Or whatever. Yeah.
Exactly.
Yeah.
But if you go to look at Australia and you look at the EU, they've adopted that technology.
Mm-hmm.
Coming back to blockchain again, if you look at that particular case, you're taking what's available information today for anyone who decides they understands how to hack something. I mean, I don't know about you, but I bank with 4 different institutions, and I've gotten 3 of these letters from them saying your information may have been accessible, right? Your information's out there. So in my opinion, I think you would want to find a way to secure it better. I do agree with you. It's a consumer education. I think this is deeply rooted in Canadians. It's the same reason why so many customers continue to go back to the bank for their mortgage, right? It's what you've always done. That brick and mortar is what gives you confidence. And until we can change that, none of this changes. You can change technology, you can change the processes, you can bring everyone on board, but until, the average Canadian is comfortable with the concepts, right? In some ways we do ourselves a disservice in saying, mortgages are the biggest transaction of your life and you need to have an individual there coaching you along the whole process. I agree with some of it. I don't completely buy into that whole statement. Ultimately, the only thing that matters for you, I think, is that you have a place to live and there's a roof over your head and you're secure, you're safe. And how that ends up being, I think there's some variability as generations change.
Yeah.
You may see this become more of a digital process in the end than it is today.
Takes a lot of different forms. I was just going through something today. I'm actually getting a new vehicle and I'm calling someone up because basically I need to get proof of insurance. That's just a whole story in itself. But I did want to talk to a person, but it's not because I wanted to talk to a person. It was because I wanted an answer quickly. Right. And I think it goes back to, we've been alluding to it a bit, underline this conversation. And you talked about a reason for your success is, understand those root problems. Is it truly that someone wants to talk to a person? And I think in some cases, yes. Right. I talked to Dean Lawton. I don't know if you know Dean out west. And on the podcast, he said, yeah, make it as digital as you can, but there's a likelihood, non-zero, that something could go wrong. And people want to talk to someone when that thing goes wrong. Totally understand that. But those other steps, why don't we digitize that? And like in my case, it's not that I want to talk to a person. I wanted a quick response. So how do you use tech, the best way for that? So I think it's completely right. And yeah, I mean, as it relates to going back to, the consumer confidence thing, I heard a quote somewhere. It's like, if the car, the automobile, was invented today, no one would use it. right? Everyone would be, oh, I don't know, you could get in a crash. Walking's much safer. I'm going to stick to that. And it's true, right? And it's absolutely the case where walking's safer. And I don't know if anything changed really in maybe the DNA of the average consumer, but maybe it's just a little bit, just the culture is a little bit less risky. Is that the right way to think about it? I think, maybe back in the day when cars were invented, I should say that there was that necessity and it forced the innovation and people just feel that they had to do it. Are we lacking that necessity, right? Or that risk taking? Again, this is more just an opinion, but I'm curious what you think.
Yeah, it's funny. I was talking to someone else about not exactly this concept, but they had an interesting take on it. There's so much information today, right? But you talk about, less risk, but in some ways, if you go back in time, you had to survive. It didn't really matter. It was, you're gathering, hunting, and surviving.
Okay, that far back. Okay, yeah. All right, sure. Yeah.
But you fast forward to today and you think about the different generations, even you go back to the 20s and what those people had to go through the depression and everything else. They're saving and grinding through whatever they could to continue to move forward. Today we have so much. Everything's in abundance, from the toys we have to the information we have.
Yep.
And, the insight that was shared with me was, because we have access to all this, we have way more than, previous generations ever would have dreamed of. It opened up this opportunity for us to almost think more. We have more things doing things for us. We don't have to do as much to survive. So we have all this time to kind of think. It almost creates more problems than solutions in some way. That was an interesting take on it.
It's kind of crazy, right? Yeah, you don't go too long ago to like you said, the 20s, where it's like, it was pretty, not that me or you were alive at the time, but you hear the stories and it's not happy. And first of all, I think we take now some of these things for granted of, the luxuries and the safety nets and the different things that we have. But it's one of those things like analysis paralysis. I think that's a scary thing. We have all this abundance, and it can create some unforeseen issues. I think that Mark Andreessen, I don't know if you know Mark Andreessen, he's done some podcasts listening recently. And one of his quotes that I really like is he's talking about California. So you can interpret this any way you want with that in mind. But he said, with great abundance comes great stupidity. That was the quote, right? And that's an extreme way to put it. I don't think that's what you're saying. But I think it illustrates maybe a similar point where it's like when you have so much, it almost creates these new problems, or you create your own problems, because if you didn't create your problems, you would just be, happy all the time and nothing would be interesting. I don't know. We're getting a bit philosophical here, but
yeah, we're moving down a different path. But it does tie to your original point around, this concept of, if cars were invented today, you probably wouldn't get in one, right?
Yeah.
Because it's just, well, so much about a car. Well, what is that thing, right? The risks are so high. And I think, you can bring this back to even AI and the way people are thinking about, what this could or could not mean. Sure. Is there a world where it's possible where AGI actually happens in our lifetime? I think it's unlikely, even with the mass, innovation and all these different, AI factories that are being populated. Elon bought another massive one for Tennessee this week.
Yeah, right.
Yeah. And putting all this computing power together, I still think it's a ways away from getting to true AGI. But there's a world between AGI and today. We've been fed, there's some fear behind it because it'll eliminate everyone's jobs and, everything else. I think the best way to think about, that today and some of the maybe fears around it is really just, again, we don't really know what we don't know, but what we do know is we're building the plumbing.
Yeah.
And if you go back to like the late 90s and, the Nortels of the world and all of these semiconductors, they were building the plumbing for what became the internet.
Yep. And we're still using it today, right? Yeah.
We're still using it today, and the jobs that were created from it and all the innovation that's come from it. You go back to 1992, nobody thought you'd be having this conversation at all. It was a dream that maybe one day this could happen.
And people thought, well, if you had this conversation, well, there would be a videographer, and we just stole that videographer's job, right? What are they doing? And obviously that's not the case. Maybe we wouldn't have even had this conversation in the first place, right? So
I think that's the way you need to look at that, and there will be more to come from this than lost, although there will be significant changes, just like every sort of massive human shift, if you will, that causes change. And, we're just experiencing this change at a rapid pace. And so it's probably causes more fear and anxiety than.
It's so quick, right? Like a news article from whenever the tractor came out, and like 80% of the world was a farmer at that point. It said, oh my God, this tractor's going to take all our jobs. And obviously that didn't happen, right? But the people who still tried farming by hand when the guy next to him had a tractor, well, he didn't do so good. So it's the Darwin thing, right? It's not necessarily the strongest that survives, but the most adaptive to change, right? So anyways, we kind of got pretty philosophical here, but it was a lot of fun chatting with you, Chris. Maybe just to wrap up, well, first of all, if anyone's interested in chatting with you more, maybe some of your details where they can find you, and, bringing it all back, how are you guys, quote unquote, adapting to the change? There's some new tech, obviously, in the general ecosystem. How are you guys maybe more practically kind of bringing it back down to earth? Are there certain things that you're really excited about looking ahead, what it means for the lending space? Love to hear that, just to cap the conversation.
Yeah, for sure. Well, we are diving into AI as much as we can. I mean, it's an equalizer. It allows to find potential challenges and speed and find what's next for the end user to be able to do their job faster. I think if it's used properly, it's an augmentation to what people do. And, it should have a 10x return, in terms of speed and efficiency and finding risks and finding challenges. Again, not taking it away, just enhancing. So we launched a product just at the end of last year. We called it Ava as an assistant. It's an assistant that will now live across all of our product lines. So depending on where you are in that journey and which solutions you're using.
What's the feedback so far?
It hasn't been put in production. It's just,
okay.
But it's probably 3 months away from being truly in production. But from the testing and things that we've done with it, I mean, it's pretty powerful in terms of evaluating files faster and finding, like I said, next best actions and all these cool things that you can do with AI. That's where we're focusing a lot of our time outside of our core loan operating systems and things like that. If people want to look us up, we're on FundMore.AI. Feel free to reach out. Or on LinkedIn and everything else.
Awesome. Well, thanks, Chris. Again, this was a great convo. Like you said, for anyone listening who wants to reach out, FundMore.AI, that's their website. Chris, great guy. I think he's always up for a chat no matter what. So thanks again, Chris. This was fun, and I'm sure we'll chat again soon.
Yeah, thanks a lot. Bye.